Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, we're going to talk about the truth about interest rates and 2023, what you need to be prepared for if you're going to be an investor or changing your deal or just want to know what's going on with rates this year. Now, this channel is all about my investment journey. I'm growing my portfolio. I'm growing a portfolio for my two daughters. And I'd like to invite you along on that journey with us. You'll learn some stuff along the way. Very easily, you can join us by subscribing and hitting the bell notification. We're on the way to 5,000 subscribers now, and you might be the one that helps us get us there that little bit faster. So interest rates, we've had 10 back-to-back Bank of England meetings where the rates have gone up, which is absolutely insane. Effectively, money was free before. You could get interest rates so low a year ago, but that's just not the case anymore. Now, we're starting to get back to rates that we saw prior to the 2008 crash. Now, a lot of people are saying things like, this is the end of property investing, house prices are going to crash, and they might be right. Now, house prices are likely to go down as a result of the interest rate rises because it means people can't afford to borrow so much. So obviously that makes sense. But is it the end of property investing? Well, I'm not sure about that one because the market will adjust, prices will adjust. And for years or decades, we had rates that are higher than they are right now and people invested. So investors will always find ways to make money. And so I don't think it's the end of investing. Now, why have the rates gone up so quickly? And why is this happening? And what can you do to protect yourself? Well, rates have been rising because of inflation, right? You've read about that. You've heard about it. You probably never even talked about inflation prior to the last year, but now it's on the tip of our tongue in every conversation. So inflation was running rampant. It got higher than 10%. It's still higher than 10% now. I think it went to 11%, right? It's down to 10.1% now, but it's still very, very high. And that's hitting us in our pockets. And so that's not good because it means that we're paying more for all of our food and drink, and petrol and fuel is more expensive. And one of the bigger costs is heating our homes. That's got really, really expensive in the last few years. And so we obviously want to make sure that that doesn't happen for too long a period of time. So when we get high inflation, last time we saw this was in the 70s, what the Bank of England is tasked to do is to bring that inflation down quickly. And how you'd normally do that is you would raise the interest rates higher than the inflation amount. And so we should be raising rates till 11%. But this is slightly different because there are certain things out of our control. It's not inflation because we have been just greedy and we're all spending so much money. It's because of things like quantitative easing, which is the government has printed a ton of money, which has devalued our currency significantly. But they needed to do that. We needed to keep going through COVID. They needed to provide bounce back loans. They needed to create the furlough scheme. That was very important that that happened so the economy didn't collapse. But now we're paying the price for that. We've also obviously got the war in Ukraine. That impacts that as well. So what's going to happen with interest rates in 2023? Well, they're going to keep rising. And so right now, we're sitting at a base rate of 4%. However, the forecasts that the banks believe is that the rates will start to come down at some point. But first, they're going to go up. And so when we had the mini budget a little while ago, I can't even remember when that was. Was it October, November? If you know, tell me in the comments. But when we had the mini budget, we had Liz Truss in charge. And so at that time, the markets didn't feel like the government had a plan. And so there was a real shock at that point. The pound massively devalued against the dollar. And we thought that interest rates would go as high as 6.5%, which isn't great. Now there's a bit more certainty. And the consensus is that rates will peak probably no higher than 4.5%. Now, no one knows for sure what's going on because if inflation doesn't start coming down quickly, then that rate could change massively and we could go up to 5 or 6%. But at the moment, the forecasts are predicting the base rate would go up to this level. Now, you might be watching a video like this because you're coming to the end of a term on a mortgage. So maybe you've got a 2-year deal, 5-year deal, I don't know what it is, and you're on a good deal right now, and you're thinking, what should I do? Now, so some options that you've got is, don't just look at fixed rates, look at variable rates as well, because maybe you can go onto a variable that doesn't have a penalty clause if you leave. And so when the market rates do come back down, or that could be 6 months, it could be a year, it could be 10 years, no one knows for sure. But if you wanted to try a variable rate, that could give you the option if the rates suddenly did drop, and when they will drop is if we go into a recession or a deep recession, then they'll cut rates to get us back out and trading again. And so that, if you went on a variable rate, would give you that option. Other things that you can do is to maybe look at a shorter deal. That could be an option. But there are some rates out there that aren't too bad. I mean, HSBC and Virgin Money are both offering rates that are lower than the actual base rate at the moment, because they've got the way to borrow that money, or they've borrowed money previously, or it doesn't really matter. Fact is, all that matters to you is when you're looking at this, there are options, right? And so what I would do if I was in your scenario, and I'm doing, because I've got a property portfolio, is just look around. Don't rush things. Initially, when the rates started going up, my advice was to fix for 5 years. That's changed now, because since I was saying that, the rates have gone up multiple times. So we're now at quite a high rate. So with the deals that I've got that are going to end this year, I'm going to fix them for 2 years. And so that's the ones that I've got that end in the summer. I've got a few that end nearer Christmas. With those, it's just going to be a wait and see approach. I'm just going to see what is going on in the market. Has there been an indicator that the rates are starting to come down or peak? And you can get this information by watching things like the Bank of England speeches when they raise the rates. In that language that they used in the last meeting, they talked about this being close to the top or potentially at the top. And so that's good and that's positive. And that means that maybe we stick at 4% for a while, but maybe we go back down to 3.25%. I do think that longer term, rates are going to be well above 2% for at least 10 years, I feel. But I do feel they're going to go down from where they are right now. And I think the market is going to adjust accordingly. So I don't think you need to massively panic. The market might not have some growth, like its last month was just a static month. It might even drop, and prices will adjust accordingly. But as a property investor, would I be looking for deals? Yes, because you know what the rate is going into the deal, and a new deal. So for example, if I was to buy a new purchase, I might fix for 5 years then, just to give me that certainty on that deal. If the deal stacks up and it works and that's a great deal, then maybe that's what you prefer as an investor, is certainty. So you've got to go out there and just see what you prefer. If you like risk, variable rate is an option. You could sit on that variable rate. You might get a good deal on that and sit on there and be able to leave without a penalty. That could be one option for you. So have a think, but do go in there, speak to a broker, get advice early, because you can start the process months ahead of time before you come off the deal. And so maybe you can get a good deal now before the rates go up again. Let me know what you think in the comments. Do like this video, guys. And I pinned a comment below that will show you our new ebook. Go and grab a free copy of that today. Do check out all the other content on my channel, including this video right here.